Hi guys, and welcome to Learn to Business and the next video in our top 10 tips. In this video we're going to be focusing on funding your business, be that putting cash into a sole trader or putting cash into a company. And it's worth noting that none of the things that we discuss in this video should be construed as advice. You can, however, use this content to facilitate a conversation with your accountant. For simplicity, we're not going to be covering partnerships as part of this video. And one of the reasons for that is it kind of depends on your exact partnership agreement as to how you're going to be able to fund that and the implications of it. But we'll cover some more of those key points in our wider course.
Now for sole traders, it's a lot more straightforward. If you remember Brian and his business are essentially the same thing. And whilst we do recommend that you keep a separate bank account for your business, this is mainly for ease of tracking your income and expenses, which will be relevant for your tax return. And so really, to get cash into your business, all you do is transfer your money from your personal account to your business bank account. Now, if you're looking to buy some expensive equipment, maybe build an expensive website, or maybe you're looking to buy some business premises, you might start to think about getting a business loan or a mortgage. Now, before you start thinking about that kind of finance, what we really recommend is that you check out your credit rating. Because if you've got a poor credit rating, it's really going to bite you in the arse later down the line when you're trying to get this financing. And websites such as Experian, you can get your credit rating for free, and they also have some great recommendations on there as to how you can boost your credit rating. If you're looking to get cash out of your sole trader business, again, it's pretty simple. This time you just transfer cash from your business bank account to your personal bank account. This is sometimes referred to as drawings, but remember, anything that you do take out of the business will be before income tax and national insurance. And therefore, it's really important that you set aside enough for your tax and your financial obligations. We're going to be talking more about tax later in our videos. In terms of getting third-party investment into a sole trader business, you're probably limited to getting a loan from either a bank or a private investor, or getting somebody else on board. But remember, if you get somebody else on board, then you're no longer a sole trader, you're a partnership, and you'll have to register as such with HMRC.
And companies provide you with a lot more options for funding your business due to it being a separate legal entity. So let's start with how Brian could get his own personal funds into his business. And there are two main ways of really doing this. There's one, subscribing for share capital, and two, loaning his money into his company. Now, share capital can either be incredibly straightforward in that you'll subscribe for one share when you set up your business and then completely forget about it, or it can start getting a lot more complicated when you start thinking about share capital, share premium, and different classes of shares. And if you are going to be funding your business through share capital, then you'll need to update your share register on Companies House. But we would recommend that you speak to an accountant first before doing anything. The second option Brian's got for funding his business is through a loan, and this can be incredibly straightforward as it's literally transferring cash from his own personal bank account to his company bank account and letting his accountant know. These loans are generally interest free, but you do have the option of charging interest, but it is worth noting that repaying the loan is tax free, but paying interest does have tax implications that you'll need to consider. And it's because of this simplicity and flexibility that the preferred option tends to be to loan the money into your business as opposed to subscribing for share capital, as trying to repay yourself share capital can be quite a messy process in terms of both the accounting and legal aspects.
A company can also borrow from a bank or private investors. Now, these are likely to be formal loans with regular commitments and pretty serious consequences if you can't meet those commitments. You'll likely have to provide your financial records, cash flow statements, and realistic forecasts, and this is when having good financial records really starts to pay dividends. As always, we'd recommend that you do keep a cash buffer for a rainy day, and I guess the year 2020 really does epitomise the importance for that. If it is the early days of the company trading, it's likely that you as the shareholder or director will need to give a personal guarantee for that loan. That means that although the company is the legal borrower and it has limited liability, it could be you personally who needs to find the cash to repay the loan if the company can't. It's also really common for companies to get private investments from either business investors or it could be family and friends. For this investment, the company could issue shares to the private investors, I guess just in the same way as you see on Dragon's Den. They're always asking for an investment for a certain percentage of equity. Equity just means they're going to be issued new shares for that investment. Or the private investor could advance a loan to the company instead. Assuming interest is paid on the loan, there could be tax and legal implications, and again, we'd always recommend that you speak to your solicitor and or accountant.
So thanks for watching this video, and hopefully it's been helpful in terms of giving you some things to think about when it comes to funding your business. And if nothing more, it acts as a reminder for you to check your credit rating. And if you do need to improve your credit rating, then there's a number of options available. We've included a link in our notes below to Experian's website and the advice that they give around how you can improve that. And as usual, just go to learntobusiness.co.uk for more information and to subscribe for our course. Thank you.